Hello and welcome to our third and final mining pitch battle of our Mines and Money online global event that's been taking place from the 22nd to the 24th of June. My name is Andrew Thake and I'm from Mines and Money. I'd just like to do a quick thank you to the Queens and Government who've been our sponsor of the event throughout the week. But without further ado, as we've got an absolutely packed lineup for some really great mining contestants and 4 great investor and judges, I'd like to hand you over to our host and our MC, who is Richard Morrow, Chairman of the Melbourne Mining Club.
Yes, and it's a big Mines and Money welcome from Melbourne, Victoria, Australia, where we might be under COVID lockdown here and it's winter, but we do have a good old-fashioned gold exploration boom happening in the historic Victorian goldfields. Yes, my name is Richard Morrow and I'm Chairman of the Melbourne Mining Club, ringmaster of today's event. We hope to set a cracking pace in our pitch battle today between 3 ninja warrior companies hoping to grab the virtual prize today, and that prize, it's a virtual $1 million investment, 7 figures. We have an expert panel of 5 pitch judges assembled to put our explorers through their places. So let me introduce them. First up, we have Paola Rojas, Managing Director of Synergy Resource Capital in Sydney, New South Wales. Good morning to you, Paola. Kingsley Jones, Chief Investment Officer of Jevons Capital, Jevons Global, I should say, also in Sydney. Paul Lapiniere joins us from Perth, and he is the senior partner there at Ibaera Capital in Perth, WA. Kevin McElligott, Managing Director of Australia for Franco-Nevada, is on the team as well. And our final judge, Stephen Motteram, Head of Corporate Development with the Noble Group in Singapore. Well, there's a virtual million hanging on your verdict there, judges. So what are the rules? It's a tough battle with no holds barred. Our pitchers this morning will get just 3 minutes to give it their best shot and run through the asset and the business model. I'll give a warning when there's 1 minute left in the pitch. I'll then throw to our expert panel to quiz our presenters, to ask that difficult question that we're all dying to know the answer. At the end of the presentations, it's my turn then to ask our judges what they thought of the presentations, highs, the lows, any warts, bruises, bumps, and which one of these companies would get the virtual million. We'll tally up the judges' decision and declare a winner. Sounds a lot of fun, doesn't it? Okay, we have 3 presenters here today, so let's get right into it. First speaker today is from the Wild West of Australia, Jim Malone, General Manager of Investor Relations and Communications of the ASX-listed Wiluna Mining. Jim, your 3 minutes starts now.
Thank you, Richard, and thank you very much to everybody, and it's great to be here. I'm actually sitting on the Gold Coast, actually. We're at a conference here, so it's nice to be in Queensland. I'm here to tell you why I think the best investment is Wiluna Mining, and I'm just going to share my screen with you so that I can get the presentation up. And basically, Wiluna Mining is, we believe, one of the best turnaround gold stories on the ASX, with probably the best leverage to the gold price. We have a massive resource. We're currently producing gold, so we have operating cash flows. We've also got a planned and funded plan to go forward to increase the production from where it is now at about 52,000 ounces per annum. Stepped transition to 120 by this time next year, and then in 2 years beyond that to 250,000 ounces, which would that makes us one of the largest gold mining companies in Australia. So I'm just showing you here a map of where we are. We're at the top end of the Northern Goldfields, so we're in Tier 1 gold country. There's obviously where we are, there's over 400 million ounces in the Yilgarn, which makes the Yilgarn one of the most richly endowed districts globally. We own at the northern end there, outside of the historic town of Wiluna, we own a vast 1,600 square kilometres of blue chip real estate. Now, if this was in closer to Kalgoorlie, I'm sure there'd probably be 10 companies with that sort of land holding. So we do have significant opportunity beyond what we're doing at the moment. The operation is actually now the 8th largest in Australia by mineral resources after De Grey's announcement yesterday of Hemi. We've got 7 million ounces, but we also have a target of 5 to 7 million ounces on top of that. And we believe that we'll eventually get to somewhere between 12 and 14 million ounces, which will put us in one of the largest resource
1 minute left, Jim.
on the ASX. There's just the share structure very quickly, and I'll highlight our market cap of 150 million and our cash and bullion at the moment of 62 million. And then this is our expansion plan. So we currently produce 52,000 ounces of gold. We're halfway through stage 1, which is fully funded, where that will be commissioned in October and fully ramped up by early next year to produce 120,000 ounces. We've also fully funded a feasibility study to look at increasing our production starting next year, stage 2 to 250,000 ounces. And then beyond that, obviously there's opportunities, given the sheer size of the Wiluna opportunity, to go to somewhere between 400 and 500,000 ounces per annum. So why would you invest in us? We're largely a huge system. We're only drilled to 600 meters. There's endowment there of 11 million ounces. Most Jundee and most of the mines around us are being mined.
Sorry there, Jim. Jim, your time's up. Jim, I'm sorry, I've got to cut you off there. It's a hard game, this. But 3 minutes is up, mate. And now I'm going to throw you to the rules. Great work, though. You pitched it out there. First up for our judges today is Paola Rojas from the Managing Director of Synergy Resource Capital. Paola, what would you like to know more about Wiluna than Jim was able to get out in his 3 minutes?
Yeah, that was very, very quick. I think I would like to hear a bit about the management team. For me, the team behind, you say that you've done this before. So I would like to hear more about your team, your management team.
Okay, well, we're managed by a guy called Malone, who's a veteran. He's a mining engineer, geologist, and an economist. He has done this before. He took Straits Resources, an ASX-listed company, from 40 million market cap to a 4 billion market cap before getting out in the early 2000s. Our operations manager is a gentleman called Neil Meadows. Neil is a metallurgist and an operations expert who was brought in to fix Motteram when it had the problems that it had when it was first commissioned, which he did successfully. And then he also worked for Clive Palmer up in Queensland Nickel, and was able to have an excellent team of geologists and some good financial people. But the engineers and the people up on site are very, very experienced, because this is going to be a very big underground mining operation, and we need obviously good people, and we've put that team together over the last 18 months.
Okay, thank you.
Yeah, that's quite an impressive team there on that one. Now, next question, I'm going to throw to Kingsley Jones, Chief Investment Officer of Jevons Capital. Your question, sir.
Hey, Jim, thank you for that. That was really good. You led with the term turnaround, which always is a bit of a red flag for me. So can you talk us through that? What exactly is being turned around? Seems like you're actually producing. So I'm curious.
Well, Wiluna has had a bit of a check. Wiluna's been mining on St. Patrick's Day this year. It was the 125th anniversary of their discovering gold at Wiluna. So it's a very big and old mining centre. At one stage, the Wiluna mine was the largest gold mine in the British Empire. What happened was, when the last 10 years, Wiluna's had a slightly checkered history. It's been tried to be developed by small companies without the balance sheet, who were really just picking bits and pieces out of it and not really focusing on the big asset, which is the huge underground sulfide asset. And that's what we're doing now. We spent considerable time where we could fund this properly. Previous owners in the last 10 years have tried to do it and haven't had the balance sheet to do it, and run into problems. So that's why we're saying it's a turnaround. We're also taking it from a modest 52,000 ounces a year, not particularly cheap ounces, all in sustained of 1950, to a much larger, up to 400,000, possibly even more over 3 or 4 years. So the whole opportunity is changing dramatically. So that's why we consider it a turnaround. And that's probably why the opportunity is there. It's very cheap at the moment, and we consider it, we're undervalued. I mean, we're at $21 a resource ounce. The average is at 190, and it's the same, reserve ounces of 100 compared to 600. We understand that that's because of what's happened in the past, but we're hoping that, we'll get marked eventually when we turn this around, which we're doing. We're halfway through doing it. It's funded and it's being done in the right way, on time and on schedule.
It's great. Good on you on that one. Now, Paul Lapinier, partner at Ibaera Capital in Perth. Do you have a question for your for Jim?
Yeah, thanks, Richard. Jim, so I'm curious to hear a bit about your expansion plan, specifically, what the processing of the sulfide resources is going to look like, and how you're going to up production from 50,000 to 250,000 ounces.
Sure. Well, currently at the moment, we are transitioning to that sulfide production. Up until now, since we have been producing gold in this last effort, we've been producing our free milling ore through a CIP plant. So we've only been able to produce the free milling ore and not the sulfide ore. And 90% of the ore at Wiluna is sulfide ore. So what we're doing now is we're building a concentrator that will be that's 54% built, and that will mean that we'll float the ore will still go through the front end, then it'll be floated, and we're going to produce a concentrate in the first instance. And we've actually got 100% of that concentrate for the first 3 years sold in offtake to a Russian group called Polymetal, 70%, and 30% to Trafigura. We'll also produce on site, because we'll have three or four different multi-circuits, gravity and some tailings retreatment. We'll be able to treat the tailings and some of the free milling ore. So for the first time, we'll actually be able to treat all the different ores that exist at Wiluna. And then eventually the plan is to double the size of the concentrator, that would enable us to bring the front end back to the CIP plant, produce more free milling ore, and then also probably at some point in time, we'd put a POX converter on site, which would allow us to treat some of the lower grade concentrate and turn that into gold doré. So that's where the expansion comes in. That's going to be done on a phased basis, so we don't blow the bank up on the way, and we can pay for a lot of it out of the cash flows that we're going to generate in stage one. So that's how we plan to do that. Most of that ore will be coming from the underground sulfides at the Wiluna Mining Centre. We do have free milling deposits on site in Lakeway and some of the other areas on our vast land holding, but at the moment we're going to be mainly focusing on producing from those underground sulfides through a concentrator, producing a con with a sort of 20% of it being converted into gold doré on site through the free milling stuff that's coming out of one of our small underground mines, but also through the tailings retreatment.
Okay, thanks.
That's great. Kevin McElligott from Franco-Nevada. Do you have a question there? Just a few problems there with the audio. Look, I'm moving to Steve.
Yeah.
I'm sorry.
Yeah, we haven't got Kevin as one of the judges. We've just got 4 judges: Paola, Kingsley, Paul, and Stephen. Maybe you want to go back and see if any of the judges have got any questions.
I was hoping Kevin might be one of the judges, because we pay them a nice royalty, the Franco-Nevada guys. So it's probably it's in his advantage if we produce a lot of gold.
So, sorry, we'll go to Steve Motteram, Head of Corporate Development at Noble Group. Sorry, Stephen, your question.
Thanks, Richard, and thanks, Jim. Coming from a trading company, I was interested to hear about the involvement of Trafigura and Polymetal. Can you tell us a bit more about the capital structure, Jim, particularly Mercuria's involvement in debt, and how that helps with your cost? particularly around where you think the break-even all-in sustainable cost is now and where it might be in the future? Thanks.
Sure. Look, we've got 158 million shares on issue. As I said, we're trading at about 95 cents, so a market cap of about 145. We have just drawn down a second tranche of debt from Mercuria. They did lend us in a prepayment a 21 million last year, which we're paying off next month in July. We were paying that off in lots of 700 ounces of gold delivered. We were lucky at the time, or good fortune, because we were able to lock in a hedge at 26.74 Aussie. So that's helped us with our cash flows between now and then. We've currently now drawn down on the second tranche. It's actually a slightly different type of loan. This is just a term loan payable over 4 years with a 6-month holiday. That's 42 million US. And there's 159,000 ounces of hedging, which again, we're a little bit fortunate. When we drew it down, we locked that in at US 18.20 an ounce, which will be payable over the 4 years. As far as costs go, the costs at the current operation, which I spoke to, are relatively high, have been running recently at about 1950 all in Aussie. The costs for the first stage, and remember, the stage 1 is really just a transition to stage 2. It's being done because that's what we can afford at the moment. Stage 2 will be really when we optimize the mine. And so stage 1, our all-in sustained, which we haven't been able to release, so I need to be a little bit careful, but it will be less than where we are at the moment. But I can say there's a feasibility study for stage 2, and we're hoping that at stage 2 we'll be able to produce for somewhere between 1,200 and 1,400 Aussie all-in sustained, but that will come out in the feasibility that will be released at the end of the year, this year.
Well, Jim, that's a great presentation there, and I saw our judges taking plenty of notes there, mate. I think you might have got your nose ahead in the bid for the $1 million prize, virtual prize, I should say. So thank you very much for that, and we'll let's see a bit later what the judges think. And now, we are leaving Australia and heading over to the Americas. We've got Holly Miller, a Director of Communications with Giga Minerals, listed on the TSXV. Holly, don't let the Aussie influence on the panel put you off. Your 3 minutes starts now.
Hi, everyone. Thanks for joining. And sorry about the mix-up. Mark, our CEO, was due to be on, but these time zones are always a good time. So we're Giga Metals. We are a junior mining company based in Vancouver. I'm in sunny and hot Vancouver right now. And we own 100% of the massive Turnagain nickel sulfide project, which could produce over 1 million tons of ethical low carbon nickel in concentrate over a lifespan exceeding 30 years. So the nickel concentrate comes with a cobalt kicker at about 5% of the nickel content. And nickel and cobalt are both used as energy storage metals for the cathode in the premium EV batteries in use today and in future. So as the demand for EVs increases, so will the demand for nickel. Yeah, so the strong points of Turnagain are all related to our 100% ownership of this huge nickel deposit. And the ownership structure simplifies decision-making, including potential deals with strategic partners. And this deposit is very huge, so it gives great option value to a rising nickel price. So we always say our economics are marginal at current nickel prices, but once nickel prices go up, which we believe they have to due to the rising demand of electric vehicles, so does the value of our project. So we have a great location for ESG sensitive investors and customers. We're located in British Columbia, Canada, in northern BC, quite far away from Vancouver actually. But this is a mining friendly jurisdiction with several large mines producing copper and precious metals already today. So this is a great jurisdiction for sustainably produced nickel. We also have access to low carbon power through the provincial hydroelectric grid. And we have one of the most robust environmental and social permitting systems in the world, in a jurisdiction that has implemented the UN Declaration on the Rights of Indigenous Peoples. So we also have very good relationships with the local communities, the Tahltan and the Cascadena First Nations, and they're both very mining savvy First Nations. So yeah, they're very involved in the mining industry up there. So
1 minute left then, Holly.
1 minute left. Perfect. So I can just wrap up then. Yeah, like I said, we have a very ESG friendly project here. And with the way things are going with the electric vehicle revolution, we believe that people who want to buy electric vehicles are also going to be very conscious of where the materials in their EV come from. And that's why it's key that we have sustainable, clean nickel. So we've recently done some research out of UBC showing that we could be, in fact, a carbon neutral nickel mine without having to purchase any carbon credits. So that's pretty big news. And I can hopefully take the rest of the questions or dive a bit deeper in the question period.
Thanks, Holly. That's a great presentation there. Thank you so much for jumping in there. That's well, it's certainly a medal for the times and a process for the times. And so let's see if our judges have got a few more questions there. I'm going to go to Steve Motteram from the Noble Group in Singapore. First up, Steve, any questions there for Holly?
Sure, Holly, thanks for that. You touched on the economics of the project. I can see from some of the slides you're at a PEA stage. Could you just talk us through in detail a little bit more about the returns, the NPV of the PEA, and what the assumptions were around the sort of the costs of production, the CapEx, and also your nickel price assumptions?
Yeah, so am I allowed to share my screen right now? Or is that saved for?
You can share your screen now. That's absolutely fine.
Perfect. So let me know, can you see my screen here?
Yes, indeed.
So we've got our PEA is at a base case of $7.50 a pound nickel, and we've calculated the price range, the sensitivity price range here. So right now, with nickel prices as they are, it's not looking so great. But once nickel prices go up, then we start to see the balloon effect.
Okay, thank you for that. Thanks for that slide there. Paul Lapinier, Ibaera Capital over in Perth. What's your question today for Holly?
Hi, Holly. Yeah, my question's really about the site. You talked about this very large deposit. Seeing that previous slide about the marginal economics, I can only assume it's pretty low grade. Can you talk to me a little bit about the grade of the resource and the size and how it fits together?
Yeah, so we have in measured and indicated, we have 2.3 million tons of nickel and 141 kilotons of cobalt. And that grade is 0.22% nickel. So we are planning to make a high grade concentrate from that. And yeah, so in the multiple test work campaigns, we have 15 to 21% nickel in the deposit.
Certainly a medal for the with the focus on battery technology, and that's it. Paola Rojas, Managing Director of Synergy Resource Capital. Paola, what's your question there today?
Considering that you are an explorer, I would like to know, well, first your market cap, then when was your most recent raise, how much cash you have in the bank, and if you can tell me a bit about any relevant shareholders, either institutional or significant.
Yeah, so our CEO, Mark Jarvis, is the biggest shareholder at I believe 6%. And our current market cap is around 30 million, 32 million. We're trading at around 37 cents right now. And we did a financing in April for around 6 million. That was a private placement. And we're speaking with lots of different people right now. That money that we raised in April is going to be used for a summer drill program this summer. So we're heading up to the camp, and we're going to be doing some resource drilling and geotechnical drilling to get a bit more data so that we can advance to the pre-feasibility study. So we released an updated PEA in November of last year. And so that's what we'll be doing this summer, and that's where the funds are going to as well. And in the bank, we have about 9 million.
Okay. Thank you.
For that. Kingsley Jones, Chief Investment Officer of Jevons Global. Have you got a question there for Holly?
Yeah, Holly, thanks for that. You mentioned with the price deck, obviously, higher nickel prices is what's going to make this work. So some delay is impounded in that in terms of economics. But also you mentioned the strong ESG credentials of the the location you're operating in. So my question really relates to timelines and your line of sight on your bugs and bunnies on environmental permits and so on. How does that tie in with your PA and PFS? So what sort of, minimum length of time would be looking at from a purely permitting aspect to get this project into production?
Well, we're looking to get this into production around earliest 2028. So we do have very thorough permitting systems here in British Columbia, but the Canadian government and the BC government also recognize the importance of mines like ours and critical minerals. And we're in discussions with the government as well. So that's very, what's the word? A good sign that they also want this to happen. So we also think by 2028, 29, 30 is also when, the nickel supply is going to be in high demand. So that's our target start date for production.
That's good. Well, judges are taking more notes there, Holly. I think you've made a good impression in that. Well, thank you very much. The fight for the virtual million is certainly hotting up. Our final presenter today is Doug Ramshaw, President of Minera Alamos, also listed on the TSXV. Doug, your 3 minutes starts now.
Okay, thank you, and good day, Dragons. We are a Mexican mining gold developer and operator, in fact, and I'm actually going to start today's presentation slightly differently and focus on capital, the notional capital that you're going to throw to one of us today, and something we pride ourselves in terms of what we do with our capital. And mines are expensive to build. We build them cheaply. We have just completed our first one at a capex cost of just 10 million US. Projects are lengthy permitting processes. We do it quickly. Mexico, where we're focused, has a very good permitting environment, and it allows for a realistic timeline to not only build our first mine, but have our second and thirds plan behind. Management's aligned with your shareholder capital. And so spending our shareholder capital, which could be you, we like to do carefully and efficiently. We focus on bootstrap mine development, where we're going to fund expansion and exploration out of cash flow rather than the hamster wheel of financings with Bay Street or Howe Street or whatever the street is in Sydney. And focus specifically on open pit heap leach using contract miners in Mexico. But we don't just apply our low capital intensity to building mines. Our salaries are lowest quartile. Our senior management have spent more in the market than they have been paid by the company buying our shares to align. And even on the marketing side, there's no point building mines cheaply if you're going to blow it all on marketing. So we like everything we do as a company, we like to do efficiently. We own 3 projects, all in northern Mexico. I can say hand on heart, all three are going to be mines. We like that against the 1 in 1,000 exploration shot. So Santana, that just went into production with the first mine blast last month, is scheduled to get up to full scale 45, 50,000 ounces a year next year. By middle of next year, we should be starting construction on Cerro de Oro, our second gold mine. And we have a
1 minute left, Doug.
third one waiting in the wings, fully permitted, ready to go. That should see construction in 2023. So these collectively can see us move to a 200,000 ounce annual production rate, and we're fully funded for this. We envision this business in a pre-$1,300 gold environment. It works in a $1,300 gold environment. We're debt-free. We have 20 million in cash. We set stock options above market. We tie them to gold production. You know, everything we try to do, we'd like to think that the industry could be doing better. We've got growing institutional interest, growing analyst coverage. And I think as good husbands of capital, if you invest your million with us, you know, my hope is this production profile gives you a dividend policy to pay that million back with interest in the years to come.
Oh, good pitch there, Doug. You haven't got the mill yet, mate, but you gave it a good show there. That's very, very promising presentation there. So now we're going to throw to our judges. First up there, Kingsley Jones, Chief Investment Officer of Jevons Global. Kingsley, what do you know more from Doug?
Doug, you mentioned it's in northern Mexico. I think that's what you said. Just talk to us about the security situation there. Do you have any particular concerns or issues that you need to plan for when you are producing there? And maybe if you could tell us a little bit about your mine plans on site, whether you're going to produce on site or otherwise, you know, given the security context. Thank you.
Yeah, so security, I mean, is a different animal in the north compared with the south of the country. We'll never go to the south of the country because I'll never put our shareholders somewhere that I won't be prepared to go myself. So the north is different. We actually save capex by, we're not building an ADR, we're shipping loaded carbon. It's a more benign product. One still has to be careful, but if you are producing gold doré at site out of an abundance of caution, you'd be spending more on security than it costs for us to ship and strip the loaded carbon. So no, the environment's good. Our team's operated in Mexico for 13 years. You know, we're cognizant, being a largely Mexican national team, of how to operate in the country. But like any country in the world, it's got its issues. And you know how to deal with them. So I'm sorry, the second part of the question was with regard to the production profile. Was that right?
No, actually, I was just asking about the security aspect, but you've answered that. Thank you.
No, that's good. That's good. Good question. I suppose you always get asked that question, don't you? It's yeah, but it's a novel way of coming up with a solution there with the loaded carbon. Nice thinking out of the box there, Doug. Well done. Now, Paola Rojas, Managing Director of Synergy Resource Capital. Have you got a question for Doug? Ooh.
Yes. I was thinking about, you mentioned that you're having increased institutional investors joining. So if you could talk a little bit about any of relevant parties, and what's the, I'm not sure, did you mention the market cap?
I didn't actually, no, so I can do that too.
Yeah, okay.
Yeah, right now we've got a 300 million market cap. I think we're a penny up on the year, so just over 300 million market cap. In terms of institutional investors, I mean, our biggest shareholder is a Cisco Development. They own 17% of us, but outside of them, we're 18% owned by US generalist investors. And I think that's important because I think for too long the industry maybe didn't focus on the bottom line. It was about top line production, you know, number of ounces in the ground, and at the expense of worrying about the bottom line. And maybe it's one of the reasons the generalists are not in the sector the way they should be. So, you know, I tailor how we present the story to the generalist investor that have a long-term view, which when you're building a long-term business, I think is important. More recently, we've seen institutions come in on the last placement we did was, and hopefully the last placement we'll do, was last August, September, and that was largely an institutional book. But we've seen institutions pick up, one in particular, Invesco, have bought almost 3% of the company just out of the open market in the last 6 months. So it's refreshing to see our story resonating with groups such as them.
Yep. Okay.
It's good to have that level of support on that one there, Doug. Now, Paul Lapiniere from Ibaera Capital. Have you got a question for Doug?
Yeah, thanks, Richard. Doug, I'm curious to hear about how you generated these projects. I mean, you mentioned in the slide, it's a better shot than a 1 in 1,000 exploration, but from experience, obviously good due diligence and project generation generally gives you a better shot at the title. So how did you generate these projects?
Yeah, so the founding asset was our 3.5-4 gram open pit, La Fortuna, which is actually going to be the third project we build, even though it's got fantastic economics. That was actually bought back from Argonaut Gold for a couple of $1 million a few years back. Our team had formerly built a mine called El Castillo in a company called Castle Gold that Argonaut bought. So we bought that project back, so we knew that one intimately. In the case of Santana, the first mine that has just gone into operation, that was a project in a company I'd been parachuted in to clean up. And the first day on the job, I realized I needed to do something transformational and merged my company with Minera Alamos back in 2018. It was very much a 1 + 1 equals 5 type merger of equals. And then the third one was one that just our presence in Mexico and the reputation of our team there. A vendor came to us knowing that really the asset needed to be built. And certainly in North America, I think there aren't enough teams like us that actually want to build mines. So, eyes and ears and, being based in Mexico, as most of our team is, really opens up a lot of opportunities. And, we have a good reputation down there, so people want to work with us.
Thanks, Doug. That's really good.
Thanks very much. And I love that line about there being on the hamster wheel of raising finance for the sector. No, good, very good. Well, we've got you on a nuclear powered hamster wheel here today with these judges. I tell you, you're under the pump there, Doug. Look, thanks very much for that. That's our final presentation, and thanks to our other two presenters this morning. We had Wiluna chasing gold in WA, Giga Metals, nickel in Canada, and of course we just heard from Doug there down there in Mexico. But who will be our winner? Who will take home the imaginary $1 million investment? Our all-star panel of judges has picked and chewed at these excellent companies. They put the acid on the presenters. Now it's time for me to put the acid on them and see who will get the $1 million investment. Paul, I'm going straight to you first. You're the Managing Director of Synergy Resources Capital in Sydney. Which project caught your eye? Who gets your check and why?
First of all three stories are very interesting and compelling. So it was hard, and I think the other judges are gonna agree. I have to go with what feels the most appealing to me, and that's Alamos. It's not surprising, maybe, but there's a few reasons. Obviously, I understand Latin America very well, and I do know that the pricing advantages that you can get in terms of local costs, I know how massive the impact is. So that's one point. The second point is that the institutional investors you've got, which, mainly Osisko. I worked with Osisko in the past. They are brilliant. And if they trust you, that for me is also a really big sign. And the fact that you're studying in like that you decided to go the other route, studying with a small production so that you could fund your own progress and development. For me, that's how it should be, so that you're not in that hamster wheel, because it kills so many companies that I really like that sort of strategy. So that's why I vote for Alamos.
Thank you very much. Good one straight off the bat. Although, Paola, is it precious metals that you more would put your money with at the moment, more comfortable there, or versus the base sort of thing?
Well, I started my career with mostly copper, gold, silver. Then I got into lithium about 10 years ago. And then more recently into not only lithium, but also, the other nickel and cobalt and all the other battery minerals, metals, I should say. So all the stories I could pick either of these, really. Like, they're all good stories.
Yeah, thank you. So one vote to Minera Alamos. So we move on. Kingsley Jones, Chief Investment Officer of Jevons Global. Which of these companies and the presenters got your votes and why?
Well, let's run through them in sequence, and then I'll give you the conclusion. So starting with the Giga Metals, I think, that whole nickel cobalt equation for the future, particularly in the years in which you're considering most likely to come into production late this decade, there's a lot of option value for nickel cobalt in the ground for that sort of property. So I think as long as you can bring the permitting through and then prove up through the PEA and PFS, it's a pretty good prospect. Having said that, it's a long wait. And so personally, depending on the capital structure, this is one where as the prices move up and down all over the place, as we know they will, you're likely to see your share price being pretty volatile in response to that value in the ground. So I'd probably be playing this one through the warrants, if there are such things, or options on the market. As far as Minera is concerned, I think Doug gave an excellent presentation there on husbanding capital in a very rich and prospective region, where in the past a lot of investors have shied away because of the security equation, and I think Minera's got a fairly interesting solution there. In terms of project development, probably a pretty good pipeline. So I think that's a good steady Eddie. And if there were not other prospects there that I would want to consider, then I'd certainly put money against Minera. Which brings me to, I guess, the final one. And you might have guessed this is the one where I'm going to put my min in, which is Wiluna. And the reason for that is pretty simple. Jim led with the term turnaround, which I don't think is the best opening pitch. And I mean that in a caring way, in the following sense. It immediately drew my attention to the right thing, which is what is the puzzle associated with the value of this property. And it was in the turnaround. And through further questioning, we discovered that ultimately you've got an option there, perhaps over time, to increase the volume of production by a factor of 8 and substantially increase your gold margin through getting that AISC down. So I think there's a puzzle evaluation here with Wiluna that could really unlock that with progress against your plan, and also a refined pitch on how that math works. Up my volume by a factor of 8, I think, in your plans you shared, and maybe get my gold margin up by another factor of 4 or more, possibly. And that adds up to very, very substantial value creation. Where you've got existing gold production that perhaps finances the early part of that, it's certainly one I'd have a really good poke around at. So given that it's not really my minion, I'm putting the minion on Wiluna.
Thanks for that, Kingsley. Wow, we're one vote each. Now we go to Paul Lapiniere, partner at Ibaera Capital. Paul, did you go for the home state team with Wiluna, or did another project catch your eye?
No, I'd go for Minera Alamos. Reason being, I think the guys, sounds like the guys there have a pretty strong track record in country. We've looked at a few projects before in Mexico and have kind of struggled to get our head around it from just the perceived risk and security. But what was really key in those due diligence activities was if you've got a really good local team, you can do some really good things. And I like the reason why I asked that question about project generation, because we see a lot of value get created when people intimately know the assets, and it was really clear that Doug knew these assets before they got them. They weren't just brought in the door by some punter. So he obviously knew the assets and he knew that they were going to work well. And I think so far their track record, if you look at the most recent track record of all teams, they're the one that's delivering right now, and they're the ones that would get my money.
Well, thank you for that. Well, gee, Doug's getting his nose in front here at this stage, but we've still got one more judge to go to. Stephen Motteram, Head of Corporate Development at Noble Group in Singapore. It's decision time. Who got your mill and why?
Well, again, thanks to the three presenters. I guess two similar projects being in the gold sector, although at slightly different stages of their development, and then one being Giga, which is much earlier stage. I guess when I think about putting this $1 million down and assuming it's a one shot and I can't do another million and another million in future to follow my money, I'm always concerned with the sort of exploration investments I've done in the past around dilution. I take I think it was Kingsley's point on Giga being $1 million, and it's a bit of a call option. It's a volatile ride, but I'd be particularly worried about dilution for my $1 million on that one between now and when production potentially starts. I think if I then turn to the gold guys, I take quite a lot of comfort from the resource and reserve status of Wiluna. Perhaps I missed it, but I couldn't quite get with Minera where they were on their NI 43-101 position. It seemed as though one of the projects had sort of a resource, but I'm not quite sure where the others sat. And granted, the company is quite debt-free, which is positive. The market cap is strong, but I just felt there was better line of sight with Wiluna in terms of what the projects are, their potential to reduce costs as production ramps up. And I think from a perspective of a one-shot investment, I'd be most comfortable making that in Wiluna in terms of getting my money back in the near future.
Oh, that's well, that looks like it's a tie, isn't it? That just confirming that was Wiluna there, Steve.
Wiluna for me, yeah. Thanks.
Well, I'm here to call it. It's a tie. 2-2 to Minera, Alamos, and Wiluna. I've actually been to Wiluna. Actually, I've had a good look at it. Certainly one hell of an asset there, and glad to see Jim and his team are really ploughing into it there. Well, that's it. $1 million gets split down the middle, $500,000 each. That's very, very fair and a good outcome today. So it's now left to me. That's the verdict. Now to thank our presenters here today. We had Jim Malone, of course, General Manager of Investor Relations and Communications at Wiluna Mining. We had Holly Miller, who's jumped in there and bravely taken on our fierce team of judges there. Didn't get the chocolates, but a great pitch. And of course, Doug Ramshaw, President of Minera Alamos. That is 3 great presentations, and thank you very much for the pitch. And of course, a big Minds and Money thank you to our judging panel, with Paola, Rojas, Managing Director of Synergy Resource Capital, Kingsley Jones, Chief Investment Officer of Jevons Global, Paola, Partner at Ibaera Capital, and Stephen Motteram, Head of Corporate Development, Noble Group, joining us from Singapore to make a truly international judging panel. Well, that's it. The Melbourne Mining Club and Minds and Money team, thank you all for joining us today. We thank our presenters and wish everyone happy speculating. Thank you.
Thanks, guys.
Thank you.